Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar is easing off Wednesday's peak and was only a handful of points away from its objective of 67 cents when profit taking emerged early Thursday after a mixed labour market data showed employment falling by 21,300, even though the jobless rate held steady at 4.3%. Softer hiring briefly pressured the Australian dollar, but the RBA's hawkish tone continues to prove a firm floor after Governor Bullock signalled further cuts are unlikely and rate hikes remain on the table if inflation remains sticky. Meanwhile, the US dollar slid from the highs around 99 to 98.20 on Wednesday after the Federal Reserve delivered a widely expected 25 base point rate cut, even though policymakers signaled a possible pause from here. The quarter point move marked the third cut for this year, but divisions within the FOMC persist, with the median projection still showing just one more cut in 2026. However, that could all change with front-runner Kevin Hassett saying that there is plenty of room to cut further unless inflation turns higher. But overall, the Aussie is maintaining a weaker play after profit taking has heavily set in, as we can see here. Let's see if the pullback can eventually reach around 65.5 to 75, where a bounce is anticipated. Moving on to the euro, a very firm candle here as the rally now touches the 117 level and backs off slightly. Given the fact that the technicals, the RSI is firm, MACD is positive, and the ADX holding to a bull trend, could see the market clear 117.15.25 and rally on to 118.20.40. Any pullbacks sees or views support around 116.5. Finally, getting a little bit more bearishness back into dollar yen as it slips from the 156 into the 155 area. And now looking at 155.45 as the next challenge. Given where the trend line is, a break here, and I feel is a potential head and shoulders, given the fact that the shoulder, head and shoulder, and the measure move down from the break of this trend delivers a target somewhere around 150.5, which is where I'm keen on, given the fact the MACD is heavy and the RSI has married up to that. Any upside attempts should be limited around 156.15.65. Turning to sterling, Marubozu candle comes through once again. Not as strong as previous, but still in the path of that trend that could see further elevated moves to the level of 134 or even 135. I like this pattern and could see the bullishness continue. Gold, well, still hugging to this trend line, but still maintains a bullish bias to 4,250 as a potential target. Nearly got there today. Shouldn't rule out another challenge, and if so, could actually see it onto 4,300. Keep an eye on this trend. We don't want to see it break, but given the fact the RSI has buckled slightly, MACD is weak, we do need to monitor. Also, we've got a bounce in oil, and maintaining off that trend line could see a move beyond 59.5 and on to 60 to $62.5 a barrel as a potential target. Well, that's a wrap. Thank you for joining me. And as always, look out for the news report. I hope you enjoy the great start to the day.